there are several different ways to crack into real estate. Let's give a little bit of light to each one of them. But I would say like long-term rentals, obviously, are a big one. Short-term rentals, and kind of a very friendly, familiar face to the channel, house hacking. Let's talk about each of these, and we can leave house hacking for last because I think that's just a component of long-term and short-term. But let's get into long-term rentals and what that really means for most investors.
Yeah, I call it like the boring strategy, just not that exciting strategy, because it's just buying maybe a house, maybe a duplex, and your goal is to hold it for the long run. Find a tenant who's going to stay, like ideally be somebody who signs a 12-month lease originally, but they stay for 2 years, 3 years, 5 years. Like it's all about longevity and not having a lot of turnover. That's the perfect long-term rental. And it's not going to be like your best cash flow rental compared to like a short-term rental, which I know is your expertise and you teach a lot of. They both make a lot of sense, but it's a little bit more of a passive investment. There's not quite as many moving parts, and it's boring in the best way, because like I have most of mine are long-term rentals, and I do have property managers on mine, but I spend 2 hours a week is kind of my normal thing on many properties. And so that's once you plant that seed and get these properties up and running, a long-term rental can be it starts off with a lot of work when you buy it, but then it becomes a much, much more smooth and passive investment over the long run. I think that's one of the big benefits of long-term rentals.
So technically speaking, a long-term rental, I believe, is anything that's 28 days or more. I think it'll depend on the municipality. It might be 30 days or more. I think when we're talking about it, and what most people refer to in the long-term rental space, is generally when you have a tenant in your property on a 12-month lease. That's going to be the most conventional approach to long-term rentals. The reason you're saying it's passive or more passive, if I'm understanding this correctly, is because you have one single tenant, and assuming that tenant is good, we'll talk about kind of the stray cases here in a bit, but assuming that tenant is good, they're paying rent on time, you've vetted them, and let's say you have a property manager, then that's a fairly passive property, at least for a year at a time, until you have to replace that tenant if they move out, right?
Yeah, exactly. Think about it like a part-time business, but a very, very part-time business. It's passive enough, and compared to some other options you have, which have other benefits, I'd say it's one of the most passive investment strategies you can take.
Now, you mentioned you have property managers. I think that this is where most people opt into on the short-term rental side of things. On the long-term rental side of things. How much does a property manager generally charge, and like what does that factor into from a cash flow perspective? Like, does that eat into quite a bit of your profits?
In my case, I'm in Clemson, South Carolina. I'm in a college town. And so it's going to depend on your market what the average property manager charges. But for me, on a long-term rental, it's 8% to 10% is kind of a typical number. And you might have some people who also charge you a little bit of a leasing fee. And so I might have somebody who charges 8% of the monthly rent you collect, and then a half a month's rent or $250 rent whenever they move in. So that's kind of a typical number. I've seen some higher price markets like California and higher rents where it might be like 5%, 8% might be a more typical number. But the thing is, yes, that's an expense. But if you think about time being your most valuable asset, so I imagine most people watching this, you're going to be pretty busy at a day job, or maybe you're flipping houses, or you're doing something else that's like your active income. And the long-term rental is your wealth builder. And so you want to optimize your time. And so I think paying somebody, if you have a $2,000 rental, if you pay them $200 a month to collect the rent, to lease the property, to handle the maintenance issues in the middle of the night, like $2,400 a year to have somebody handle all that, that seems like a pretty good deal to me. And the other benefit of that is it frees up your time to go make money, active money, somewhere else. And it also, for those of you who aren't all in on managing your own property, there's nothing wrong with that. But if you're not all in on it, they handle some of the, the initial, what kind of people complain about in the real estate business of getting a tenant call, getting a, leaky toilet in the middle of the night. That stuff for you, if you're the passive investor, you just write a check, or you give them permission to write a check for you. And that just changes the dynamic of the stress level that you have to deal with on a property.
Now, let's talk about the kind of the not so sexy part of long-term rentals, which is like, let's say you have a bad guest. Obviously, if there's ever going to be a squatting situation, that's someone that doesn't want to vacate your property, it's generally going to be in a long-term rental. Is this something to actually worry about? Is this a reason to not get into real estate, or is it something that's how do people kind of navigate this?
Yeah, there's a negative with every good opportunity has some negatives too. And so if you have a tenant who doesn't pay you and they know the system, especially in certain states like California, New York, where it's a little bit more tenant friendly, they could stay in the property for a while and until you could go through the legal process to get them out of the house. That's a downside. What I'll say is though, I very rarely have that happen. I had it happen a lot earlier in my career when I was not as good at screening tenants, but you can do it legally, you can do it ethically, you can screen people to make sure they can afford your property, to make sure they've paid other landlords well, to make sure they demonstrated they have character using their credit report or reference letters. So there's a whole process you can go through to make sure, you're never gonna be 100% sure, but you're gonna be like 99.8% sure, that this person is gonna treat you and your property well. And if you do that, most of the time that's a very low risk. Now you still need to think about that and be prepared for it, and I like to have cash reserves set aside just in case. Like you don't ever want to run your business like really, really skinny, but you have reserves for those kind of rainy days, worst case scenarios. But if you screen well, you do that well, chances are you're going to get great tenants. I've had amazing people who've lived in our properties and they treat them well and they're appreciative of where they live. And we're basically partners on this house. Like they live there and they take care of it and they pay the rent. We do any big maintenance. We pay for any big expenses. We bought the house. We fixed it up. So I think it's a positive relationship in most cases. And you hear about the horror stories, but those are much more rare.
Okay. Yeah, that's great. I wish I had those relationships with my short-term rental guests. Well, let's talk about short-term rentals because it's obviously a different game in pretty much every way possible. One thing that I'll say before we kind of get into this, because I feel like every time I talk about short-term rentals, people are like, dude, why are you doing this? That sounds horrible. But there's more cash flow on a short-term rental. That's generally very, very clear. With more cash flow, right, the more money you make, in my opinion, the harder you're going to work to make that money. And so the reason that long-term rentals are so passive and why they feel much easier than a short-term rental in most instances is because you make less money. You're talking like $200-$300, right? On a short-term rental, very possible to make 1,000 plus, right? Market specific, house specific. A short-term rental differs in a lot of different ways. A short-term rental is a property that is rented for 7 days or less. That is how the IRS defines a short-term rental. Now, it doesn't mean that you can't have the occasional guest that comes in for 2 weeks or 3 weeks. That does happen. But in general, most people that are staying at a short-term rental are staying between 3 to 5 days. I get a lot of 1 to 2 nighters as well. And these people are paying for a fully furnished property. In a long-term rental, it's completely empty. The tenant moves in their own furniture. But in a short-term rental, it's on you as the investor to completely furnish it and provide amenities and provide just a lot more bells and whistles than you get with a long-term rental. Because of that, you can charge a lot more. You're charging on a nightly rate versus charging on a daily rate. And so when you're talking about charging, let's say $1,000 a month on a long-term rental, well, ideally on that same short-term rental, you're doing anywhere from $3,000 to $5,000 a month in gross revenue. Again, profitability is always going to change and vary, but generally my rule of thumb is this, just for anyone at home on how I look at deals. If you think about long-term rentals, they're going to make 1x. Mid-term rentals make 2 to 3x. That is 30-day stays that are kind of this weird hybrid of both. And then short-term rentals are like 3 to 5x. So if a long-term rental makes $1,000 a month, a mid-term rental might make $2,000 to $3,000 a month, and that same short-term rental would make $3,000 to $5,000 a month in gross revenue. Now you get a lot more turnover. You need to hire a lot more people on a short-term rental. There is just a lot more maintenance, a lot more guests that are kind of holding you hostage and saying, hey, if you don't get this leaf out of my pool, I'm going to leave you a 1-star review. So there's definitely some headaches and heartbreaks that come along with a short-term rental, but the cash flow is there. Hey, by the way, if you liked this conversation, I've got good news for you. There's way more where that came from. If you want to watch the whole thing, click right here.